Ladies and gentlemen, welcome to the setup. It's an absolute pleasure to have you here. My name is Lorenzo. I'm the co-founder of the Limitless Trading Academy. And here for you, as always, covering something very important in the charts. Okay, without further ado, let's dive into it right away here. We had an amazing, crazy week. Okay, hope you guys have absolutely crushed it. This is the Friday. This is where you reflect. This is where you take some time for yourself to analyze all the pairs, all the trades that you have done, and not just rush it, okay? So do this. Take your time, analyze what you've done, reflect, and see what you could have done better, or maybe you did everything perfect. Always room for improvement though. Okay, let's go into the news of this week. The FOMC main news came out, the CPI came out, we covered the CPI live. We talked about if gold holds above the 1975 key level, we're going to look for longs. If it closes below, we're going to look for shorts. So we're going to cover gold in a second here. For now though, the FOMC statement came out at 5.5%, just as expected here. So what does this for kind of effect have on the market? Okay, well, in regards to the dollar, you might think, okay, the dollar is dropping, but that's not really the big issue here. No, it's the treasuries, okay? The treasuries have been absolutely dumping hard due to the fact that because there are no increased rates for this coming year right now, or at least for now until the end of the year anymore, we are now sure that potentially people, can dump their treasuries again, the liquidity back into the stock market, and so on and so on. We're going to talk about the stock market as well as gold in a second here. But look what happened, okay? 10-year yield crushed it, came absolutely down. Full on break of structure, break of a strong area of support here. Very important stuff. If you look here, you see that we had previous support here, previous support there, or previous resistance there, previous support there, and now we broke finally through this main zone here. This is the main reason for that main gold pump here, okay? So where you look at the dollar sometimes to compare what gold is doing, or where you're trying to predict what gold is doing, sometimes it's more important to look at the treasuries, okay? And you see that in this case, the treasuries are still extremely weak, okay? If you look here on the daily, you can see already right now that the treasuries are still coming down, are still looking extremely weak. And if you look at the gold chart right here, you see that gold is still looking extremely strong, okay? So even though that the dollar right now is trying to push up a little bit, you see that gold is still holding very strong. So what you need to do is to make sure that you focus on the 10-year yield and a negative correlation with the 10-year yield and gold here, okay? In this case, guys, we talked about gold right here during the CPI, okay? We said the following. We had two scenarios, remember. We were waiting for the CPI to come out. We said key level is 1975. We have that overall trend, okay? Sometimes very simple, okay? I don't want to overcomplicate things all the time here. Sometimes a simple trend is literally your friend. Sometimes this is just the simplicity of trading, okay? You don't have to always overcomplicate things when you see on the higher time frame it coming to these crucial levels here, okay? So the 1975, absolutely amazing. There were two scenarios that we were looking for. Number one was we were coming back down one more time and we shoot up. The other way is we come down, we break below the 1975, we look for the pullback and we short gold. The first thing actually happened here, okay? So the FOMC came out, we were in a long position, we took our profits out here. Did I expect it to come all the way back to the top? Well, this is where the majority of liquidity was at. But at the same time, during the FOMC, you want to get out of the market as soon as possible. You don't have to stay in your positions, in my opinion, due to the fact that during any speech from Uncle Jerome, the tide can turn and he can start talking, hawkish again, dovish again, and therefore, gold could turn around. Very simple. Okay, so what do we see here now? Okay. The next step for gold is that we close our candle, and this is important that we look at the weekly closure above the 2036. I want to see the weekly candle closing above here. If that happens, this particular session here, I remain extremely bullish on gold. Extremely bullish on gold. I do believe that we're going to come back towards the 2070 here. This is extremely bullish, okay? Whenever you see an 8-hour level coming up like this or coming down to aggressively take out the lows, to then immediately change, for example, right here, and you see that V-shaped recovery, and you start consolidating above previous resistance, extremely bullish for gold, okay? So I'm definitely not interested in looking for shorts at the moment for gold here, even though we have already pumped a significant amount I think that this leads towards more continuation in my opinion. This looks extremely bullish to me. However, is it better? Is it perfect for a setup right now? I mean, that's up to you. I don't personally see a really clean setup where I'm like, yes, I want to enter in the middle of a range here, you know, to try to get more, you know, upside potential. I think that this is where the opportunity was. I think right now we're right in the center. I think now we have to see and play out how gold will perform here. But I do see more upside potential for gold in the next coming hours ahead of us here. Now, also let's look at the dollar real quick. Dollar real quick, you've seen higher highs and higher lows, okay? So we talked about the negative correlation between gold and the dollar, but that's not always the case. Most of the time we see a negative correlation between the treasuries and gold right here, okay? So in this case, the dollar is looking quite good. We have been dropping significantly as well, don't get me wrong, but we have been creating higher highs and higher lows constantly right now, okay? So this is the low, this is the higher high, higher low, higher high, higher low, higher high. So we're looking to come up. I do not see direct some sort of bear flag potential here. I do think that we can come up and shoot up towards this range, okay? And that's coming back towards the 102.5 for the dollar. So I do see more upside potential for the dollar here. Now, what I do see more downside potential from is the euro, okay? And I already mentioned this on my Instagram as well as in the private group in the V3 where I had two setups posted. One was the euro and the New Zealand dollar and the other one was the euro against the yen. Both short, okay? And the reason why was because of this massive expansion to the downside today. We saw the euro absolutely dumping. The CPI came out as expected yesterday as well. For that particular reason, we saw that the euro turned around and start becoming very weak. So in this case, look at this weekly candle here. I hope you guys can see it. Let me zoom in a little bit more so you understand a little bit more what I'm talking about in this case here. Look at this candle and look at what we're heading towards to, okay? 8 hours, 36 minutes left for a weekly closure. We came up aggressively. We got rejected right at the top for the euro here. We saw it flipping, okay? I would not be surprised if we're going to see a candle flip happening on the weekly here before the weekly closure, okay? So that means more weakness for the euro, in my opinion, okay? Crazy stuff here. If you come down here and we start breaking, I do believe that there is more downside potential for automatically. When you look then at the euro against the US dollar here, I do see that we now have been topping out. I do see a very nice setup coming along here for the euro against the US dollar, okay? Look at this high, look at that rejection. This is on the 8 hour, right here. Both significant rejection right now on the euro against the USD. However, let's take this to the lower time frame, okay? And look at this beautiful trend here. This is the internal market structure, right? The market is fractal. You can see clearly that you go from higher to lower time frames here. You're playing the different game on the lower time frame, but you want sometimes to have the higher time frame aligning with the lower time frame for you to increase your confluences, to increase the chance of success whenever you're looking for setups here. That's why patience sometimes is so extremely important. And that's why, in my opinion, sometimes trading less is more when you're looking for these type of setups here. So in this case, you see now clearly that we have been building a fantastic trend here to the upside. We have been building that liquidity now right here. We had this beautiful range as well. This is what I call the consolidation, the expansion, the retracement. Now particularly looking potentially here for a rejection for the continuation to the downside here, aligning one more time like we said before already with the 8 hour chart here, right? So the higher time frame rejection, then the lower time frame liquidity building, then that consolidation, expansion, retracement, that rejection of that trend and that breakdown towards the downside with a weaker euro against potentially a recovery of the dollar right now, particularly pushing up here. So in the short term, I would say that the euro short setups right now are probably the best thing that you can look for today if you're still looking for some trading setups here on the lower time frames. Okay, very, very clean overall. Euro USD is a prime example here. Okay, we also talked about the euro against the Japanese yen and the euro against the New Zealand dollar. These are all for our V3 members. Now, let's go into the yen basket because this is also important for the next coming weeks ahead of us here because I am going to be... I'm very bullish on the yen at this particular moment. Just to clarify what I'm looking at, okay? This has been a long time ago since we have seen this momentum here turning for the Japanese yen. Really like what I see. So number one, we have the weekly chart here of the Japanese yen basket, okay? And the reason why I want to start here is because this has been a while ago since we actually met this particular criteria for what we're currently looking for. So number one, we had that weekly support. We broke through it. We turned that weekly support into weekly resistance. We got rejected, created a lower low, But now we're back at that resistance right here, okay? And you might think, wow, maybe we're gonna get rejected here. But let me tell you this. In my opinion, if we actually get, if we close this candle semi-bullish here, okay? This weekly closure semi-bullish here for the Japanese yen, I think there is a big chance that next week we will potentially continue trying to push in towards that break here, okay? And if we start breaking, we might be ending up into a significant more upside potential here for the Japanese yen basket, coming back into stronger, you could say, territory right there, okay? So for that particular reason, I'm aiming for, significant breaks for other particular pairs here. Look at GJ, for example, on the weekly. The reason why I'm looking at the higher time frame here is just because if you start breaking finally below and you start closing here, and I will zoom in for you guys here on GJ right now, okay? There we go. Look at how strong we have been holding here multiple times right now at this particular moment. And we start to build more and more liquidity below any of these levels. The highs are already taken out right here, okay? So these highs are already taken. The lows here are constantly building up more and more liquidity. So I do believe at some point when we start closing below this level, and it couldn't be more clean and could be more clear, we will start dumping here. And I think the ultimate confirmation will be if the yen basket will eventually start to pop up and come out of this level, breaking the 7,165 here. So I'm extremely bullish right now for the yen. Based on the monetary policy statement that the Bank of Japan released also 3 weeks ago, they finally decided to also change up their statement in regards to, making sure that their currency does not get wrecked any longer due to the fact that they have to dump their own treasuries back into the US market here. So therefore, I do see a short-term recovery for the Japanese yen, and I think the time has yet to come. Daily candle looks extremely strong here. Now let's continue with the NASDAQ, okay? Very important NASDAQ level I'm looking at right now. Just to clarify for you guys here, the NASDAQ is finally, and this is important to mention here, finally back at the highs, okay? We're talking about the previous highs here of early 2022, the end of 2021 here, okay? We're finally back at the highs here after a significant dump. We finally came back. We are now back at a particular level. So what I want you to pay close attention to right now is the following. Look on the daily and zoom in, highlight that level here, and look at what we're currently seeing, okay? First of all, of course, the first candle is always a liquidity swipe here. So you break the initial highs, this is always a reaction. You will always see some sort of reaction here, particularly in the size of candle. Then from here right now onwards, we will decide potentially if we're gonna flip or if we continue here. So what I wanna see personally is I wanna see either this particular body candle, so the 16,550 for the NASDAQ, breaking and closing below, okay? So that means a daily candle closure below here, right at that level. And if we start flipping this right here, I do think we could lead into some sort of pullback for the NASDAQ right now. So again, we're at the weekly highs from the 2021, late 2021, early 2022 highs. We have been closing now a daily candle indecisive. If we start flipping the next candle here, I do see a high probability setup in regards to short potential for the NASDAQ in the very short term. But again, the treasuries are still looking extremely weak. But once again, this all depends on how we close the same candle too. So early next week, I want to pay very close attention to the NASDAQ and the Dow Jones as well as the S&P 500 in, let's say, the Monday and Tuesday. I think this is where the majority of setups come into play here. So again, congratulations on gold this week. It was an absolute pleasure. It was amazing setup to the upside here. I saw that many guys in our V3 absolutely crushed it. So congratulations if you did as well here. I think that the euro against the US dollar has that downside potential for now. So keep a close eye on this one for later today. The euro extremely weak. The yen looking for that breakout. GJ next week coming along as the NASDAQ and the Dow Jones as well here. Now, the last one I want to talk about here is Bitcoin, okay? Because look at what we have seen here. If you look at the Bitcoin chart right now, we have still not broken the $44,000. We have a very hard time breaking this level at this particular moment. You can see right now that we had that consolidation, that expansion, that retracement here, and that we're currently getting rejected from this particular high right here. So we have this range, we expanded, we pulled back, and we're currently seeing a rejection, okay? Let's take this to the liquidation heat map of Bitcoin right now. And this yellow line right here shows you where there is a significant amount of liquidity built up here for Bitcoin. And that is currently still at the 40.5K, okay, the 40,500. We have roughly around $500 million there of liquidation here just on the Binance chart. So do take that in consideration. The other liquidity is still at the 43,500, okay? So what I want to see here is the following. I want to see a dump today, particularly coming up first, then coming down second, to eventually come down to take out that liquidity, start consolidating and to potentially move and try again to come up here. So we're going to go very deep into the Bitcoin chart right here in a second here, because we will have, again, on our new channel, also a fantastic new stream, which we call Limitless Crypto here, okay? We just created a channel especially for you. If you're interested in cryptocurrencies, you can also join and subscribe on that new channel. Make sure you do, because we're going to be streaming there in around 77 minutes from now. The link is in the chat. Make sure you tune in. It's going to be an absolute pleasure. And if not, just come us, support us, hit that like button, place a nice comment. That would be absolutely appreciated, okay? Now, guys, absolutely amazing this week. I want to also do a big shout out to all our members currently in our V3. This week has been absolutely incredible. You guys have been crushing it. The energy is fantastic. The V3 live trading floor is on fire. And I feel that the energy is just getting better and better and better and better. So I can't wait to start next week. One more week of training with you guys here before the yearly close is coming along here. But don't think we're stopping during the yearly closure here. We're going to go fully crypto while the market of Forex and stuff is dead. We're going to be fully trading crypto regardless. When Forex comes back, we're going to be back on track as usual, okay? So keep a close eye on it. Guys, I want to bring you all the best here. I'm going to take a little break. I'm going to check out the V2 trading floor, and I'm then going to go for a crypto live stream. I want to wish you all the best. Take your Euro USD shorts with you today, and have a really nice day. See you soon. Back on the grind. Bye-bye.